So let's address what is going on right now, because over the past couple of days, the Federal Reserve has made some very interesting statements. And this is urgent because what they are doing is they're completely changing the markets. They're changing so many things. The stock market, crypto, real estate, right? The economy. It's a big issue right now. But I want to address what's going on. Because just today alone, and not accounting for yesterday as well, but in both days, the Federal Reserve has completely shocked the market over just the past 2 days. Yesterday, we heard from multiple Fed officials, and they stated that a faster rate hike could be warranted. That spooked the markets. Many people started selling, and well, we got to where we're at today, where we're also down even more. Today, we also learned what could be coming for the U.S. economy. Now, today we learned that the Fed is planning on reducing its balance sheet by $95 billion per month. This is actually going to include about $60 billion for the monthly Treasury cap and another $35 billion in mortgage-backed securities, or MBS. Now, here's the reason why this is so important. And again, this is just part of their major shift. The Fed also stated that there were many participants in last month's FOMC meeting that wanted to raise the rates by 50 basis points. Well, they ultimately went against that and just stuck to 25 basis points. And the reason for that was because of a lot of uncertainty, and more recent uncertainty with the war between Russia and Ukraine. And it's because of that one thing that the Fed decided and opted against a 50-point basis hike, and they went with 25 basis points, simply because we didn't know what was going to happen. Well, even just today, Treasury Secretary Janet Yellen, she stated that Russia's aggression towards Eastern Europe is actually going to have an enormous economic repercussion in Ukraine and beyond. And that's exactly what we're seeing right now. It's not just impacting Ukraine, it's not just impacting Russia, it's not just impacting that part of Europe. It's going all over the world. It's impacting us here in the United States, Canada, Mexico, everywhere. Everybody's feeling the effects of the invasion into Ukraine. Now, multiple members of the Fed just the other day stated that they are expecting to see at least one, if not more than one, 50 basis point hike in future meetings. And just so you know, these meetings that happen, they happen every 6 weeks or something like that. But here's where things get very interesting. The next meeting, it's going to come, I believe, on May 3rd and 4th. Now, this meeting, it's going to come obviously after April 12th, which on April 12th is when we are going to have the March CPI report. It's going to be April 12th, which is this coming Tuesday at 8:30 a.m. Eastern Standard Time. Okay? That is when we are going to see the new CPI data. This is going to be the first report where we have data after the Russian invasion into Ukraine. This will be scary. But here's what you need to understand. The expectation is that gas prices will be up substantially. Food prices are going to be insane. Housing was still ticking upwards, and retail was still going strong. That was all happening in March. We're now in April. Things are changing. And according to reports, these things all combined will likely result in a mid to upper 8% inflation rate. If we see 9% or higher, this is going to not only spook the markets, this is going to tell the Fed that we need to raise rates much faster. Now, if we see it come in at 8, 9.5%, what you need to understand is this is the highest inflation rate that we have seen since 1981. In 1981, we were just slightly over 10%. Now, the reason why this is so important is because the Fed is trying to control inflation. They're trying to bring stability into the markets. That's not what we're seeing. And so the Fed could completely change course. But officials have said that they could move more rapidly in order to address the soaring prices of food and energy after the Russian invasion. And even the Federal Reserve Chairman Jerome Powell, he stated that a half-point hike is on the table if needed for the May 3rd and 4th policy meeting. So when your Federal Reserve chairman is saying that yes, a half-point hike is on the table, he has said that he's brought this up saying that they've never taken it off the table, but when he's specifically saying it's on the table for the next meeting, guess what? He's probably throwing the little hints out there that it's not just on the table, it is expected to happen. So it's going to be interesting to see what happens over the next month, but as of right now, it's not great news. And while all this stuff is happening, here's what's also happening. Housing is taking a tumble as people can't afford as much house anymore as they used to due to the rising mortgage rates. Just the other day, we went over 5% for a 30-year fixed mortgage. We're also seeing Americans' buying power get reduced with the increases to energy and food. And when you are spending the majority of your money on gas, right, utilities and food, guess what? You don't have as much money to go and buy luxuries, go and get all your necessities, right? You can't afford to pay off your credit card that month, or can't afford to pay your entire mortgage or rent. That's a huge concern. And in certain areas of the country, and I don't want to spook you guys, but in certain little pockets of the country, we are seeing that foreclosures are actually going up. And it's not just a blanket approach across the United States. It's in just certain pockets of the country. So make sure you understand that if you see, foreclosures are going up, housing is taking a tumble, housing is not so hot anymore, but it's not taking a tumble. But here's what we do know. We are seeing really the net worth of millions of Americans, that's taking a tumble as stocks, crypto, and even real estate prices begin to fall. So keep that in mind, right? Keep that in mind. But while the Fed tightens their policy, experts say that we should do the same. They say we need to stop spending money like we are simply printing more. The Federal Reserve is not printing more money, okay? Okay, yes, they kind of are, but the Federal Reserve is not giving us more money. It's diluting what we have. Experts also say reevaluate your budget and find where you can save money, and do it now. Don't wait. Don't wait until it's too late. Do it now. And the last thing, if possible, make sure you are working either more hours so you can make more money, or find some type of side hustle so that you can increase your earning potential. That's what they're saying. So just understand that while the Federal Reserve is taking action on their side, financial experts say we need to be taking action on our side as well. So that's what happened today and yesterday. But again, this is urgent. We have to control what we can control. We can't control what the Fed is doing, but we can control how much money we bring in, okay? How much we spend. And that's where you need to control your finances and do it now. So if you have any questions whatsoever, ask your questions down in the comment section below. Consider subscribing, and I'll see you guys on the next one.